Hello, everyone, and welcome back to Bitcoin News Weekly Live. I'm your host, Rob Wallace, and today we've got a big show ahead of us. First, we got to take a quick look back at the last week. On Tuesday, it felt like the bottom had fallen out on Bitcoin. Nearly all of 2025's gains were erased in a single brutal move. Bitcoin fell below $100,000 for the first time since June, when Trump bombed Iranian nuclear facilities and the whole world feared the outbreak of World War III. And that same day, in the heart of American capitalism, New York City, they elected a Democratic socialist as mayor. It was a clear rebuke of the current economic order and a reflection of something deeper. Across the country, the mood has soured. The University of Michigan's Consumer Sentiment Index printed a 50.3, the second lowest rating in a 70-year history of the survey. And Peter Thiel summed it up perfectly in his interview with the Free Press this week. He said, "You can reduce 80% of culture wars to economics and 80% of economics to real estate. If you proletariatize the youth, you shouldn't be surprised when they become communist." In the 1960s, half of 30-year-olds were married and owned homes. Today, only 15% do. Trump may act on face, but he's a sharp political operator who can read the tide is turning. In this week's elections were sweeping Democratic victories. It was a warning shot ahead of next year's midterms. If Republicans get crushed in 2026, Trump becomes a lame duck president, unable to secure his legacy. That's why this weekend we saw a barrage of economic tweets coming from the White House. It began on Saturday with the announcement of a 50-year mortgage. They say that they are laser focused on ensuring the American dream for young people. But longer mortgages don't really make things more affordable. They just increase the leverage. Today, the median American home costs $500,000. At a 6% rate, you'll pay $1 million in interest over 50 years. That's $500,000 more than a 30-year loan, just to make your monthly payments $365 lower. So the question becomes, what will people do with that extra $365 a month? Most, of course, will spend it on food, entertainment, streaming, you name it. And all the leverage in the system just keeps house prices elevated. But what if you invested that same $365? If you put it in the S&P, compounding at 10%, you'd have $5 million after 50 years. If you put it in Bitcoin, compounding at 20%, you'd have $8 million after just 30 years. For those who understand how to play a debt-based system, this is an opportunity. But for everyone else, a 50-year mortgage is more like a trap. It's a lifetime of payments and double the interest owed to the bank. And while the country was still running the mortgage math, Trump threw more fuel on the fire. On Sunday, he announced a plan for a tariff dividend, $2,000 per American. And we've seen this movie before. I mean, the last time Trump sent out stimulus in 2020, inflation exploded to multi-decade highs. If you'd invested a $1,100 check into Bitcoin back then, it'd be worth $19,000 today. And this time, the market didn't wait. On the news of leverage and fresh stimulus, Bitcoin jumped from 101,000 to 106,000 by Sunday night. Trump appears ready to lean into populist economics, paper over the country's affordability crisis, and, as they say, run it hot. Pump dollars into the system and buy time before the midterms. But the math speaks for itself. Every time governments print to solve the problems, the currency loses value. The only rational move is to put those dollars into something that cannot be debased, something built for this moment, something like Bitcoin. Welcome to Bitcoin News Weekly Live. Today, I'm very grateful to be joined by Andrew Poelstra, head of research at Blockstream. Andrew, how are you doing today?
Hey, Rob. Pretty good. How about you?
Doing well. Nice. Yes.
Nice.
Very grateful to have you today. You are a man who has been in Bitcoin from the very beginning, working on it in many functions. So please tell us what you do at Blockstream as head of research.
For sure. Yeah. So, as you say, I've been in Bitcoin for a little while. I first traded Bitcoin back in 2011, I guess, which at the time felt late, believe it or not. In 2011, right? This was, I guess, right before the Mt. Gox collapse. You remember the price was way up at $34, and then it crashed down from 34 down to like 11, then 10, and oh man, that was the end of Bitcoin. That was the first end of Bitcoin I remember. So these days I'm director of research at Blockstream, and or director of Blockstream research, as we like to say. So Blockstream research does a couple of things. half of our team does signature stuff. I would say we work on multi-signatures, we're working on adapter signatures, we're working on threshold signatures, anything signatory, and lately these guys are working on post-quantum signatures. That's the new hotness, and hopefully hopefully it stays hot well before, hopefully we get something done there well before we need to, right? So I'm feeling, I'll say I personally am feeling a lot better than I was 6 months ago. 6 months ago, it was kind of, people weren't too sure whether we should ever bother taking it seriously. There wasn't a lot of progress there, but over the last 6 months, there's been a tremendous amount of research, a tremendous amount of energy going into of human energy going into researching this, which I'm glad to see as a Bitcoin holder. I think we've got plenty of time, but plenty of time does not mean we should do nothing, right? Then the other half of the team, which I personally am more involved in, we do programming language theory stuff. So we have a language called Simplicity, which is designed to work just the same as Bitcoin script, but it's designed to be analyzable or to be possible to reason about formally. So you can write programs, you can implement smart contracts, you can, whatever kind of code that you might want to write, you can do so in a way where it's possible to create formal, machine checkable mathematical proofs of correctness and security. So for those of your viewers who are familiar, Bitcoin has a scripting system right now that is in kind of this awkward position where it can't do a whole lot. It can check signatures, it can check hash preimages, which are used in Lightning channels and stuff, and do a couple other things. But despite not doing a lot, it's pretty hard to reason about this language. So the way that it's implemented on the chain doesn't match super well the way that people think about how they're locking their coins. And so when we talk about extending the script language, there's been various proposals over the last, since 2011 at least, but more recently there's been various proposals for script extensions or for covenants or for all sorts of new things, and they all, just extending script is scary for a lot of reasons. But one reason that it's so scary is that it's hard enough to reason about script now. It becomes very hard to reason about script when it's able to look at the shape of a transaction and enforce covenants and enforce contracts that might last across multiple transactions. How do you think about that? So simplicity, the goal of simplicity is to get all the expressivity you would ever need while improving the ability to reason about this stuff and giving us a hope and hell of doing cool stuff, the kind of cool stuff they can do in Ethereum without blowing that, everything just exploding all the time, and without the catastrophic failure modes that we see in Ethereum, not just for people investing in these contracts who sometimes lose money to bugs, but also there's systemic issues with centralization, where in the Ethereum world, they've got what they call MEV. They have this kind of more or less just one company who takes transactions, aggregates them, and defines what block is being made every time. There's a whole bunch of value to be extracted by constructing these blocks in clever ways, just by reordering the transactions and front-running decentralized finance transactions and all this kind of stuff. And this is a great warning for us in Bitcoin to say, here be dragons, right? We can't be blindly trying to increase the expressivity of our chain, or else we could fall into these kind of traps. So simplicity, it's a new scripting system. You're not going to see it on Bitcoin this year or next year, but we think this is a direction that we want to move in. If we want to do these things on Bitcoin, I think we want to tread carefully, and we think this is the way to tread carefully, basically. So.
Yeah, smart contracts on Bitcoin, and right now it is live on Liquid, correct?
Yep. So we launched that on Liquid sometime this year. I want to say summer, maybe July. I should have looked up that date. So we launched it on Liquid a few months ago. So that's pretty cool. So for those who don't know, Liquid is a side chain of Bitcoin that we maintain at Blockstream. It's kind of two things, right? One is it's a sidechain of Bitcoin. You can move Bitcoins onto the system. You can move Bitcoins off of the system. This sort of semi-trusted. When you move coins on, you create a proof that you're locking the coins on the Bitcoin side. The Liquid network knows how to verify that proof. Unfortunately, when you move coins off, ideally the Bitcoin network would verify that you've done everything correctly on Liquid, but Bitcoin lacks expressivity. So in that case, essentially, you have to request a withdrawal the federation of 15 signers who sign all of the transactions, and then those 15 signers will give you your coins. But in addition to being a sidechain, Liquid is an asset issuance platform. So you can also just use it as a blockchain in its own right. We have Tether and a few other assets that are circulating there. You can issue your own thing. You can do all sorts of crazy stuff there. And the reason I bring this up is that from a scripting perspective, there's a lot of interesting things that we can do with Simplicity that don't really resemble anything you can do on Bitcoin, right? So Bitcoin's never going to support multiple assets in a native way. Possibly, hopefully, it will never support multiple assets, like even in some hacky, like higher level way. But if you have them, there's a lot of kind of neat things. You can create these financial products and all this kind of stuff that we're playing with on Liquid, where you have some sort of dollar proxy and some sort of Bitcoin proxy, and you can build options out of them, and you can build collateralized loans out of them, and you can do this kind of stuff. So somewhat ironically, this is fun for me to build, and I really like working with Simplicity on Liquid. But what excites me more is to see Simplicity on Bitcoin, and it's different enough that I feel like we're not learning the right things yet just by having Simplicity on Liquid. I don't want to undersell that we launched it on a production network with billions of dollars of assets, whatever. But to me, it's a little bit of whatever. I think what's exciting here is us working towards Simplicity on Bitcoin. So what we're looking at there is we have a branch of Bitcoin with Simplicity kind of patched in. Obviously, there's no activation logic. There's no anything there, but we're thinking about trying to launch it on some test network. So the official Bitcoin test network, of course, would not let us do crazy script experiments. Neither probably would Signet, which is the big test network that has signed blocks. But there's a more wild version of Signet called MutinyNet. And I've talked to a few of the MutinyNet guys, and they'll merge anything. They seem pretty excited about it, so we're optimistic about that. And even failing MutinyNet, there's just kind of the long tail of wilder and wilder test networks that are all Bitcoin, but they're separate Bitcoin networks for the purpose of testing. So over the next couple months, we're hoping to get together a Bitcoin branch, and hopefully we'll have a Bitcoin test network. It's a little bit funny for me to say, right? But in some ways, I'm more excited to be working towards a Bitcoin test launch than I am to be working towards a Liquid production launch. But that's Blockstream research versus Blockstream in one sentence, right?
Yeah, you're out there on the frontier, seeing what is possible with Bitcoin, and it's awesome to see just how excited you are about the opportunities here, because you're taking something that is quite narrow, right? I mean, Bitcoin itself, and trying to mold it and bend it and see what can be done. And so it's very cool. Very grateful to have you here. And we are going to use your technical lens as a way to look through all the headlines that have just popped up in Bitcoin over the last week. So let's pull that up right now. We have here our newsletter, Bitcoin News Weekly, comes out every Monday morning, 7 a.m. Eastern. This week's edition is entitled Running It Hot, How Trump's Stimulus Could Ignite Bitcoin's Next Breakout. As Treasury companies wobble, the new stimulus could spark a revival of the Bitcoin bull market. So lots of things going on. This was the news of the weekend, of course. But as we always start off, each week, we go into the adoption section first. And so this week we saw SatsConf, Brazil's largest Bitcoin event, kicked off featuring a Liquid BTC bootcamp and the world's first Simplicity smart contract hackathon. So you were not at SatsConf, but do you have team members that were there? And can you tell us about how it went?
Yeah, absolutely. So we had our developer advocate Seth Schoen was running this hackathon. Huge props to Seth, by the way. He joined our team, I want to say 4 weeks ago. We brought him online. He's so Seth is an old school, you can find him on Wikipedia, an old school EFF, less encrypt, kind of computing sovereignty, computing privacy kind of guy. I'm super excited to have him at Blockstream. But he hadn't really thought about Bitcoin for many years. And we pulled him on board and said, quick, here's a refresher of the last 10 years of Bitcoin. Here's what Simplicity is. Go run a hackathon. Good luck. And he did really well, especially considering that as far as developer tooling, we're well, again, Blockstream research versus Blockstream, right? Like our simplicity development had been largely myself and Russell O'Connor and a few other people doing pretty low level, pretty sharp edges kind of stuff. And then when it came time to say like, well, how do you make a transaction? How do you actually generate an address and send coins to it? Like, okay, well, you know, you like fork this Rust repo and then you edit this code, and it was horrible, right? So we were frantically over the last last month or so writing some nice tools that people can use. As Seth was putting together the hackathon, he was like, "Hey, I'm trying to do this. I'm not sure what the next step is." And I'm like, "Oh, whoops! Oh, we didn't implement that. Let me do that real quick." So we've had a lot of late nights pulling this all together, and I was super excited to see the stuff that came out of the hackathon, because it really has been a bit of a whirlwind of writing tooling that people can use that basically didn't exist a couple of weeks ago. And then all of a sudden we're putting it into people's hands who have never used simplicity before, who are like certainly not experts at this kind of Bitcoin script kind of stuff, and seeing them produce some tangible output. It's a really gratifying thing to see. You know, I'm super happy to have this hackathon to kick us into doing the front end stuff. So
cool. I mean, did it open your eyes to anything that you had not thought of before? Like, what did they create?
Yeah, for sure. So there was a couple. So one of the most interesting things I would say that sadly they didn't implement. They had a sort of a lending. Now I'm blanking on the details here. That is a fairly elaborate lending insurance protocol, and the big takeaway for me, and the reason that it was more of a design document than a completed implementation, is that in order to do these cool, basically in order to do a smart contract, there are two broad categories of contracts, and one, the kind of the simple boring one, are these things that are kind of like one shot. Like you set up a bunch of rules and then you execute the rules. And the more interesting ones are these contracts that maintain a long kind of like persistent state. So you have some sort of insurance product, say, where you need to pay a premium every week or every month to maintain this insurance. And your smart contract needs to understand what time it is and which payments have been received and all this ongoing stuff. And the way that this problem of maintaining persistent state is solved in the Ethereum world or in Solana or in these other kind of big DeFi chains is that you have a global key value store. So every full node, to the extent that anybody's running a full node, maintains this enormous database of the state of every single contract, and they have to do like random access updates and so on. And it takes a tremendous amount of disk space, and it has to be random access disk space. It's slow. There's denial of service vectors. It's quite difficult to do. And in Bitcoin and in Liquid, there's no such thing. We have no global database of state. What we have is a UTXO set. And for those who are not familiar, this is a set of all the coins that exist on Bitcoin today. So every coin is kind of distributed across, here's a list, here's an amount and an address. That's called a UTXO, an unspent transaction output. It's an amount. Here's a giant table of all the amounts and addresses. And that's even saying address is a little bit not quite right, because a single address can have multiple UTXOs and so forth. But all you can do with UTXO set when you make a transaction, you grab a pile of UTXOs, you destroy them, and you create new ones with equal or lesser value. And the difference, if it's lesser, the difference is a network fee that goes to miners. That's how you do it. And so if you want to have a contract that has some persistent state, you need to somehow attach that state to a UTXO. You can't update the UTXO. All you can do is destroy it and create a new one, right? So then the UTXO needs rules embedded in it to kind of read its own state, do an update, figure out a new state, and then write it to a new UTXO on the output side. And all of this sounds like super low level and technical, right? And then our dream is that somebody writing code, somebody who's actually doing this, shouldn't need to be thinking about this on this low level, right? In Ethereum, it's so easy, right? You just it's basically, you say like, this variable, I'm assigning a new value to it. Like, take this number, add 1 to it, kind of thing. And you don't need to worry that number that you're grabbing and incrementing like secretly is coming from the global key value store. But in Bitcoin and in Liquid, well, right now you do need to worry about it, just because there's multiple layers of tooling that you need to do. But even once we have the high level stuff worked out and wrapped up and stuff. These architectural differences are still going to kind of poke out. And as an example of that, suppose that you want to know, suppose you have some contract that's trying to read the state of another contract. In Ethereum, this actually is pretty easy to do. You've got some contract code, you're just allowed to call arbitrary contracts, arbitrary other contracts, and query them for this kind of thing. Well, in Bitcoin, you can't do that, right? In Bitcoin, your transaction spends some UTXOs. All you can see, even once you've added all the script extensions that you want, all you can see is what's in those UTXOs that you're spending at that moment. You can't look at arbitrary other UTXOs. You can't look at the state of the chain. You can't ask how many Bitcoin issued across every single block. You can't ask, does this other transaction exist? You can't, like, all these kind of state of the chain kind of questions. You just can't ask them. And this creates kind of weird race condition kind of effects, right? So if you've got a contract and multiple people are trying to update that contract state at the same time, who wins? Well, in Ethereum, then this is a large part of what leads to their MEV and their creatively constructed blocks and so forth. In Ethereum, oftentimes you can just kind of arbitrarily reorder two contracts, and as long as the end state is kind of consistent, then that's okay. Sometimes they'll conflict in some ways, and then one transaction will just be invalid, and then it's embedded in the chain, and it just burns all of its gas, and that the user has to retry if they can. In Bitcoin, one transaction will win, and the other won't. And the transaction that wins goes into the chain, and the other one is just invalid and needs to be completely reconstructed and replayed. And from a technical point of view, how do you handle that? Right, there are a few different trade-offs that we have to make to stay within Bitcoin's the kind of design principles of Bitcoin. We don't want. One thing we could do in simplicity is we could write code that just kind of like figures it out, right? Where you have a transaction where if it can't spend the coin that it wanted to, you're allowed to just like swap out some inputs and like just like republish it, and then you have miners that are like dynamically doing this, and we could solve this by building in a whole ton of MEV. And we certainly don't want to do that, right? Like what we need is that ideally a transaction, once it's created, so we have a couple design principles. One is so-called monotonicity. When you create a transaction, it is allowed to go from being invalid to being valid. But once it's valid, it just stays valid forever. So you can't, even if there's blockchain reorgs, even if there's other transactions that show up, the only exception to that is that if you have two transactions that directly conflict with each other, if they both spend the same output, then one has to win and the other has to lose. This is one way in which you can invalidate a transaction, is by spending its coins out from under it. So with those two restrictions, together those rules, and I know I'm like kind of way off in the weeds, but believe it or not, those two rules together, for one thing, eliminate a whole ton of MEV possibilities. For another thing, they give you some really nice efficiency properties, where when you publish a transaction and nodes see that, they validate it once, and if they see it again, even after a blockchain reorg or even after whatever else might happen, they'd never need to revalidate the transaction, right? If they saw that it was valid, all I need to check is like, well, if it conflicts with something in the blockchain, okay, throw it out. If it doesn't conflict, then it's good. It's going to show up in a block. This lets us cache validation. It allows us to do something called compact blocks, where in the typical case, when miners create a block, all the nodes in the network kind of already know what transactions are going to be in that block and already know that they're valid. And so you don't get these bursts every 10 minutes. Back when I joined this community in like 2011, 2012, every 10 minutes on average, right, like Netflix would pause because a Bitcoin block would come in, and we'd be downloading a full like megabyte of transactions all at once that we hadn't seen before. And then so Netflix would freeze, my computer fan would spin up, and I'm like, okay, it's a Bitcoin. Like, sorry, Dad, it's a Bitcoin block. every 10 minutes forever. And this doesn't happen anymore, right? Because actually running a node is a very smooth. It requires some resources, but it has a low-level, constant level of resources, because we have these nice design properties that allow the network to work so smoothly. But the flip side is that things that sound like they should be very easy and that are very easy in the Ethereum world, or at least they're easy to deploy and put out there, and then like consequences be damned as far as race conditions and MEV and so forth. They're quite difficult technically, and a lot of these, to finally answer your question, what do we learn from the hackathon? These kind of big design principles, it turns out you slam into them basically immediately when you're trying to use this stuff. These aren't things that we can kind of indefinitely kick down the road and like try to solve later or whatever. It's more or less to do anything beyond what you can do in Bitcoin today using simplicity. We've got to address these kind of issues, and that's, I mean, that's the start of this. I said we're not going to see simplicity this year. We're not going to see it next year. We're not going to see it the year after that, and I won't commit beyond there. But it's going to be multiple years, right? And these are the kind of problems that we need to solve, where they're quite difficult research problems, it turns out, to do even seemingly simple, seemingly basic things.
Yeah, and one thing that could help is having more and more people addressing these problems, right?
Yeah.
With so few who actually have the expertise and the time, energy, and resources to look into it, it's a limited set that can actually push this forward. And that's where our next story comes in. My First Bitcoin, Me Premier Bitcoin. They announced their next chapter, shifting from local education in El Salvador to a global mission, empowering communities and educators worldwide with Bitcoin teaching tools and resources. So do you know the My First Bitcoin program, Me Premier Bitcoin?
Not by name. Possibly I know these guys. I'm familiar with some of the people doing this kind of outreach in El Salvador, but no, I don't know this program.
Yeah, so John Denny, he started this in 2021 when they signed the Bitcoin law, and they started very, very locally with education initiatives, and they expanded throughout the country there in El Salvador, working with local high schools, educating teachers, and now they have this global node network. So instead of being a El Salvador first program, they are now a global initiative, and I do believe that Blockstream sent a large amount of jades to the Me Premier Bitcoin node network. So yeah, have you worked on the Blockstream Jade, the hardware wallet?
No, I use the Jade. There are a few of my my projects in research that have shown up in the Jade, things like anti-exfil and stuff. But no, I don't work with the Jade team directly. One, I wish that I did more. But the Jade team is largely clustered geographically. They're largely clustered in Europe, in Western Europe, and I'm over on the West Coast in California, Oregon, Washington, of the U.S. So there's a 7-hour time zone, which frustratingly puts a big loop in my discussions with the Jade team. So.
Yeah, but yes, I believe Drew, who works on the Jade from you guys, he was instrumental in helping getting these out to all these different nodes around the world, and what they've done in El Salvador and growing to this program that has taught thousands, tens of thousands of people about Bitcoin. From the philosophical, economic foundations, and I think helps lead into the technical, like you do. This has been a very cool program, and I'm excited to see what they do next, especially as they spread further around the world and make the focus more global than just local. And then yeah, so then this next story is kind of funny and interesting. So there's been this guy named Josh Mandel, big options trader, worked at Solomon Brothers, and on March 14th, he called it last November, a year ago. He said that on 3/4 on Pi Day, Bitcoin's going to hit 84K, and it did. And then he called that on 11/8, as of I guess it was Friday or Saturday, that Bitcoin would hit 444,000. And he put his money where his mouth is, and he bet big on options, and he wound up losing $1.2 million betting on options. Bitcoin would hit 444,000 on this weekend. So yes, I mean, do you mess with options, and will simplicity and whatnot allow for greater like financial contracts and whatnot to happen on Bitcoin?
So yes, and yes. So I used to. So for several years, there was an options trading platform called LedgerX that existed. They changed the name to MyAx, and then they moved away. But from options, but they what they offered that was unique was they had physically settled Bitcoin options. So you would deposit Bitcoins on their platform, and then you could write a call option backed by those Bitcoins. And if you got run over, right, because there'd be, I guess, somebody like Josh on the other side of this kind of trade, right? And then Bitcoin goes to the moon, and you've got to sell him the coins only halfway to the moon. Is how selling how selling calls works, and you sell the actual coins. And this was a really cool platform because it had very little exchange risk, because all of the options being fully collateralized, having for calls, there was always a Bitcoin sitting there ready to back the option, whatever outcome happened. For puts, you had to have the cash, and so on. So unlike platforms like Deribit is the big one that lets you do Bitcoin options trades, where everybody's kind of levered to the tits, and if there's big price moves, like the exchange can, well, lots of bad things. There's a long history of exchanges doing dirty things and or collapsing when there are big price moves because of this. So I really liked LedgerX for doing this physically settled options, and they were Bitcoin only for a while, and then they added Ethereum, and we screamed and whined and clawed at them, but they did it anyway. But they weren't like a shitcoin casino. They weren't adding a million. Anyway, frustratingly, there was not a lot of volume. So it's interesting that Josh, I saw he's doing it using IBIT options, which today is probably the closest thing you can do. Certainly, on any mainstream like traditional equities exchange, like you could be writing options that aren't fully collateralized. There still is this kind of risk, but you're at least like, if you go on Schwab and purchase an option, and the person who wrote that option is not good for the collateral, you as the user of Charles Schwab is not going to be at risk because of that. I mean, you're just like a small fish in an enormous market with all these layers of insurance and hedges and so forth to cover this kind of risk. So LedgerX is gone. There's now no physically settled options. So if I've got a couple of Bitcoins and I would like to write call options, so I would have taken the other side of this trade with Josh, and this is not me being pessimistic. I guess directionally that is a short Bitcoin position, which heresy. But like, so if he wants to say Bitcoin is going to go past 444K by buying a call option at that strike, and I sell it, let's imagine that Bitcoin goes to like 600K or something, and he wins. Well, then I am like forced to sell him these coins at 444K. I'm not gonna be crying into my scotch here over having to sell some coins at 444K, right? Like, and if it doesn't go to 444K, like it didn't, well, I keep his premium and we try again next year, right? So like, kind of, in some sense, it's win-win for me, the holder of these, assuming I'm not like risking my entire stash or something ridiculous, right? So LedgerX was letting me do this directly with Bitcoins. Now nobody is. Now you can kind of do it with IBIT. It's frustrating using IBIT as a kind of a direct Bitcoin holder, right? Like, I could sell some coins and then purchase the ETF and then write options against the ETF. But there's like a whole ton of indirection there. There's tax inefficiency. I'm then holding an ETF where I've got to think, well, is the ETF fully, I mean, it's a big ETF. I'm sure it's fully collateralized and so forth. But there's all these trust assumptions that I'm forced to deal with that I otherwise wouldn't be. And so what could simplicity do about this? Well, okay, even in LedgerX, there are trust assumptions. I just said I have to deposit the Bitcoins and then I write the option. And like, it's great that the Bitcoins are there as long as their wallet is fine. And in the case of LedgerX, I personally knew the guy who had written the wallet software that they were. So I mean, okay, if you're enough of an OG, you can always get the right phone numbers if you want to verify stuff. But with simplicity, we could do this directly on chain. So I could write an option on, let's say, on the Liquid chain, because to write an option, you kind of, well, there are two ways to write an option, right? One is a physically settled option where you need two assets. You need Bitcoin and you need cash, right? So you can't do it directly on Bitcoin because the Bitcoin chain only has Bitcoin. It has no dollars. You can do it on Liquid. Well, Liquid has tethers on it and it has pegged Bitcoin. Unfortunately, there's still, like, it's not as trustless as it would be directly on the Bitcoin chain. But at least now the Bitcoins are being custodied by the Liquid network, which is this federation of 15 mutually distrusting peers who aren't directly involved in your contract. So let's assume that's okay for now. Then with simplicity, I can write code. So for me to write this call, I would write a simplicity contract that says, here's a Bitcoin sitting here. anybody can take these coins on December 31st, 2025, as long as they pay me $444,000 for this coin. And that's an option, right? Like that's literally it's actually a very simple, like, if this, then that. And I can say it in one sentence. Okay, there's two other cases, right? So the other is that the option expires worthless, in which case I get to take the coins back. If we get to January 1st, and nobody took the coins, and I take them back. Okay, that's the other case. And then the third is I could close out the options contract. So I sell the option to Josh. I decide to buy back the option from him later, and then I can cancel it early. So that's all you need to do for an option. Mm-hmm. But even ignoring the lack of multiple assets, you can't do this in Bitcoin because we don't have enough script capabilities. If we were to extend Bitcoin script with the extra opcodes you would need to do something like this, it's still going to be a little bit scary and a little bit janky to implement, right? So for an option where the code is ultimately that simple, maybe it's okay to do something a little bit janky and everybody reads the code very carefully with a fine-tooth comb. But with simplicity, we can write this options code. We have a model, actually an implementation of the simplicity interpreter in the ROC theorem proving assistant. So if I have a specification of what my option does in like kind of a high level language, or like essentially like a codification of the legal contract, I can produce a machine checkable proof that the code that I'm running on the blockchain meets that specification exactly. And it would be, it's not trivial, right? This is not like something where anybody can download. Like I would need to like hire a couple PhDs to like build this machine checkable proof. But in the end, that proof is it's rock solid, right? So it's a mathematical proof. Whenever we update the code, we can update the proof alongside it, right? Because anybody can write a smart contract that's secure when they first write it, right? But like wait till like the third or fourth or 10th time that the business guys show up and say the requirements have changed, you need to tweak it, and then see if your stuff is still secure. You lose confidence every time, right? But if you've got a machine checkable proof that you're updating in tandem with all of your changes, then you retain that very high assurance. And if when we're in a world where these like big like Jane Street type guys are building these fully collateralized financial contracts using simplicity, it's absolutely worth their time to throw the PhDs on it to make sure that these contracts are legit. And then we could do directly on chain. I write this. I say, here are the coins. Here's an options token that's associated with this. Anybody who holds these option tokens and gives me the $444,000 gets the coins, right? I then turn around, I sell it to Josh for like 20 cents or whatever an option that's far up. Well, okay, more than 20 cents because he somehow lost $1.2 million buying these things. I say, okay, you give me the 1.2 million, right? And then we'll see whether I've got to give you the coins, basically. So this for me personally, right? I'm kind of hurting for now that we've lost LedgerX. It was about a year ago. They kind of shut down their options operation and went away. And that was actually the primary way that I would sell Bitcoins to balance my portfolio, or buy Bitcoins to balance my portfolio, right? Because if you've got, I don't want to waste your whole podcast just like rambling about options. I want to, but I won't. But if you've got some Bitcoins, right, and you say like, well, if the price hit 444K, then I would have to sell them. Otherwise, I'd be like 99.9% Bitcoin, right? Mm-hmm. Then you might as well write an option that says like if your portfolio strategy requires you to sell or buy Bitcoins if there's a certain price movement, then by definition there's upside that is not accessible to you. You might as well sell that upside. That's what options are for, right? Yeah. They allow you to sell the upside, and it means that if you do kind of if you're wrong, so to speak, and Bitcoin does go past 444K in the timeline that you were betting it wouldn't, then you wind up selling at a very good price. There are some tax advantages to selling this way because whatever the difference, so like if Bitcoin hits 600K and I'm forced to sell at 444K, that difference, that's 160,000 or whatever dollars, that's a taxable loss for me if I am forced to sell a coin. So not only am I selling coins at higher than today's price at some point in the future, I then get to claim a loss while I'm selling them at that higher price, right? So it's a really, it was nice. I was feeling pretty good when that was the way that the world worked. But so I personally am pretty excited to see these kind of financial products being built with simplicity. We're still a little ways away, but certainly for me personally, it's exciting.
Yeah, well, you're scratching your own itch, and as a developer, you can do that. You have the power to do that. And one group of developers that scratched their own itch for privacy was, of course, Samurai Wallet. And just last week, we had Samurai Wallet developer Keone Rodriguez. He was sentenced to 5 years in federal prison, the maximum penalty, after pleading guilty to conspiracy to operate an unlicensed money transmitting business. So, of course, I mean, this story has been going on for over a year now. They were charged under the Biden administration, and now they finally got sentencing after pleading guilty. They hoped, after seeing how the Tornado Cash case was going, that if they pled guilty, they would get a lighter sentence. But part of the deal was that they could not appeal any sentence 5 years or shorter, right? So the judge gave them the full 5 years and a $250,000 fine. You, as a developer who have been in Bitcoin for a long time, there's definitely been legal cases before. What's your opinion on Samurai, what they did and what they were charged with?
Yep. So I don't know too much about Samurai. I knew a little bit more about the Tornado Cash situation. So, so broadly speaking, right? So I am a developer. I've done a lot of privacy technology. I've contributed heavily to confidential transactions, which showed up in Monero, and then later were the basis of Grin, which is a Mimblewimble chain. I've worked on something called adapter signatures, which are a way to do atomic swaps between chains or Lightning HTLCs in a much more private way. I've done, back when I was doing more like pure cryptography kind of work, everything I did was pretty privacy focused. So I'm pretty kind of close to this kind of stuff. And there's a chilling effect on doing privacy research for this kind of stuff, right? And the question always, when you see these sentences and you see these charges, like really like the sentences are almost like, they're almost like a relief. At least now you have like a fixed timeline for when you get out of jail kind of thing. But it's really, the charges are like multiple years of Kafka-esque, like who knows what's going to happen? You know, are you gonna like, you know, get like 30 to life, or are you gonna, like, you know, like who knows how this is going to wind up? And the question always is, to me, is always, right, to like what extent are they being prosecuted for developing privacy software, right? And in the case of Tornado Cash, for one thing, that they were operating a service that they were directly profiting from. And okay, and not that makes it okay to prosecute them, but it does mean, like, as to somebody developing software and publishing it, right? That's a big difference, legally speaking. So that's one reason that you shouldn't like quit or go. Maybe you should go into hiding, but like, you know, you don't need to, just based on this case. And then the allegation in the Tornado Cash, and again, I don't know the Samurai case. So this is obviously like just happened, this sentence, and I don't remember the details. But in Tornado Cash, an allegation was that there were North Korean groups running money through the service, and that the developers were aware of this, and they were allowing this to happen. I mean, I don't know that technically they could have stopped it, but they were aware of it and allowing it to happen, and they were profiting from it, right? Which, in terms of you know, building a legal case against them, that's quite damning in a way that, as a developer of privacy technology, I feel confident that I could avoid that particular situation, right? Like, and it's not a subtle. I mean, so it's frustrating because you gotta fund privacy. Like I'm saying, like, oh, it's okay, I'm not making any money on it. Well, you gotta fund privacy research somehow. Like, it's very frustrating that there is a chilling effect on building privacy services and operating them, right? Because especially if if you want your technology to be useful, you kind of need to have an ongoing service, and you need to pay your server costs. You need to like somehow make this work, right? So there's absolutely a chilling effect, and it's very concerning here. But the chilling effect that I personally worry about for my own like life and my own family, right, is it a crime just to publish just to be writing privacy technology and to be advocating for its use and to be publishing it. And again, going back to Tornado Cache, because I'm just way more familiar with that. You may remember the source code for Tornado Cache was taken off of GitHub, and like it was attempted to be like stomped out and censored and so forth. And then a few people, some academics, I think including Andrew Miller, who's an old friend of mine, he was at the University of Champaign, Illinois, and he published it on GitHub. Or was it Andrew? Was it Matt Green? Might have been all these guys, all these kind of like old school cryptographer, kind of freedom of speech type people. Said like, look, I am an academic working in cryptography. This code is important code. I'm teaching my students how this stuff works, and so I'm going to publish it. Like, come on, like I dare you to try to prosecute me for publishing it. And indeed, GitHub backed down. So I believe there was no prosecutions ever came of this. But in particular, GitHub, who is not illegal, they're Microsoft, they can censor whatever the hell they want on their own platform. They backed down and they said, you know what? Okay, you can publish it on your own GitHub account for academic purposes. So that was a win, right? So there's some small relief there. Now for Samurai, as I said, I don't know. I can't give an informed opinion on Samurai, but those are kind of the thoughts that are going through my head when I hear this.
Yeah, I think one of the things was they were very flagrant online in terms of what they said, how they marketed themselves, really willing to give the middle finger, quote unquote, to the government and say, hey, if you're a Russian sanctioned oligarch, come transact with us and you'll be all right. So yeah, they were pretty but again, they believed that they had the right to do that under the First Amendment. And so I mean, of course, there was a defense there and an argument, but this judge was not having it. We got Nima in the chat saying the main reason Samurai got in trouble was that the DOJ found chats in which the devs promoted the wallet on dark web to people they knew were criminals.
Right. So that's a similar allegation to the Tornado Cache, right? The claim is that they knew that they were dealing with criminals, and that they were, because they knew, that means they were facilitating, I guess, right?
Yeah.
So,
yeah. Well, it's I think it's very important that we as a Bitcoin community do not let this case go, that we continue to talk about it. I mean, it took years, but Ross was finally pardoned, of course. And we've got Angela from the Libertarian Party. She's taking up this case as her main focus right now, and she was instrumental in getting Ross out. So hopefully it will be the same for Keone and William of Samurai. So power to them. It's not an easy time. So wish them the best. Absolutely. Cool. So yes, I mean, we are getting shorter on time here, but there are some other news bits I would love to hit on with you. So let's take it to Bitcoin mining. I'd love to get your opinion on here. Bitcoin miners face renewed pressure as hash price, their key revenue metric, drops to about $42 per petahash a second, nearing the $40 survival threshold that could force smaller operators offline. So, I mean, it's a brutal environment for Bitcoin miners. This is their profitability petahashes, of course, they are contributing to the network. And yet, despite all this, the network, in terms of hash rate, keeps going straight up. Price has been stagnant for a year, but the hash rate has gone vertical. So what do you think in terms of profitability for these miners? Will hash rate continue to go up, and why does it go up when price has just been flat?
Yeah. Well, but as we can kind of see from this article, right? So the profitability. Well, the flip side of like we're nearing the survivability threshold is that prior to now, we were well above the profitability threshold. And while it's true that the price has been flat, I guess for the last 6 months or so, right? It's flat after skyrocketing. And historically, I guess for literally the entire history of Bitcoin since we had ASICs, there's been this, I don't know how you want to call it, this kind of hardware shortage. Well, that is a way to describe it, right? Where kind of the natural hash rate. So mining in the long term, right, is ultimately a commodity business, right? Like the profitability that you get from mining in an efficient market at equilibrium, the revenue that you get from mining should exactly pay for your capital and for your ongoing electrical costs, right? And you would expect mining to increasingly compete on having lower electrical costs to the extent that that's possible. Although one interesting thing that's changed is that electricity is more and more fungible than it used to be. And what I mean by that is that for a long time, Bitcoin was the only game in town for what's called stranded power. So I lived in Texas for 10 years. It used to be you could see the Permian Basin from space at night because of all of the gas flares. We have all this natural gas. We don't have the pipeline capacity for it. It comes out just kind of as a side effect of shale, of fracking. And so we have all this nat gas coming out. We don't have the pipeline capacity for it, so you just burn it off, right? It's better for the environment to set fire to it and release carbon dioxide than to just let it go and release methane, for sure, although it's not like a pure flame. And then there were a whole ton of projects to build Bitcoin miners around this flare gas, because they can go to run a Bitcoin miner, you need a source of power, and you need a reasonably low latency, but not particularly high bandwidth, just low latency network connection. And not even like gamer levels of latency. You're not like worried about like getting 2 milliseconds instead of 10 milliseconds kind of thing. You just need like milliseconds and not, seconds. And so these miners could go build these little like, ad hoc little power plants that weren't able to transmit power anywhere, just like mine these Bitcoins and then, send it over the cell network or whatever. I don't know exactly how they were doing this. And Bitcoin, this is one reason actually that Bitcoin, despite all the memeing, has been fantastically good for the environment, is that we replace these flare burns with people actually like running the gas into these power plants, which are able to much more efficiently use all of the methane and not have methane leaking into the air. Another related thing, also in Texas. So Texas has like the most oil in the world. It also has the most sun in the world. It also has the most wind in the world. Like it's not fair. Like Texas is not fair. And but we have all these natural gas, all these renewable things, and mismanagement around freezes notwithstanding, right? We do have a massive amount of renewable power build out that really wouldn't make economic sense without Bitcoin. Bitcoin kind of put the floor on power prices. You can't, if you've got solar panels that are producing more power than the grid can take. Prior to Bitcoin, you'd have negative price. You'd have to pay people to use the power, right? Or you'd have to just like run giant resistance. Like somehow you got to dissipate the power. Well, Bitcoin will, right? Bitcoin will just like take that power and just consume it. And so, and in principle, as long as you've got enough miners and enough hardware, right, it will keep consuming it until it brings the price up from negative, up past zero, up to whatever the profitability threshold is. Mm-hmm. And so why hasn't this happened? Like, why aren't we there yet? Well, it's because there's only so many ASICs in the world, right? Mm-hmm. So finally, to answer your question, like maybe we're finally getting to a point where there are enough ASICs to actually satisfy the demand. Because I think it will be an interesting new regime, but I think that it's where we want to be, is a world where we have basically a glut of mining hardware. And the question as to how much of that hardware is online or not is not a question of who has the contracts as the ASIC manufacturers and who has the buildings and who has the positions, but just like, there's all this mining hardware just like all over the place. And the question is who is able to mine profitably at the current price, basically. And that obviously you have like short-term Bitcoin price fluctuations, and unless you're a residential customer, you have fluctuations in the power price and so on. So there will be kind of immediate demand changes. But what you would expect basically is that you have Bitcoin hash rate turning on and off around the world almost immediately in response to fluctuations in power costs. And so for Bitcoin's decentralization sake, like we really, it kind of sucks that there are economies of scale up there, right? But there are ultimately. But the outcome that I foresee, and I think where we want to be, right, is that in order to be an efficient, profitable miner, you have to be able to like find like the whole industry of mining will become a sort of weird energy Bitcoin arbitrage play, basically. And this, I think, is the right, that's kind of by design how mining is supposed to end up, right? On the other hand, it's a little bit of a scary time, right? So we've got all these like tiny blockchains, all these like little shitcoins out there that get 51% attacked is a thing. And even when Bcash split off and BSV beyond that, and Bitcoin Diamond, there's a long tail of these fork coins, right? People worry about getting 51% attacked. And for all of Bitcoin's history and still today, Bitcoin cannot be 51% attacked because there is not more hash rate in the world than is currently mining Bitcoin. All the ASICs are oversubscribed. And in the world I'm describing, there will be, right? There's just going to be this massive slew of hash rate. And this is good for decentralization, right? Because then like there's a lot of power being produced around the world, and even residential people with solar panels that maybe they're not using the full capacity of, or who have like old crappy mining chips that just like aren't worth operating. I've got a bunch of bit axes, right, which are these little. I don't quite understand how these are mined. I think they're like surplus mining chips that have already been used, and they like package them up in this little like 18-watt miner that you can put and say, look, for each of these, I have a 1 in 1,000 chance of getting a Bitcoin in the next millennium, right? But you get enough of them, and it's good fun. And, this is all good for decentralization, right? It creates this kind of floor of kind of background hash rate of just like excess capacity that people have hanging around in random panels and stuff. But the flip side, of course, is it then we're leaning a lot more heavily on the incentive structure and the economics of Bitcoin, right, to keep the system stable, right? All of a sudden, 51% attacks are not just like literally impossible as long as we boycott whatever mining pools get too big, right? So suddenly they're literally possible. And like, depending on how the incentives shake out, maybe it could happen, right? So it's a scary new world. But Bitcoin is very big, it's very resilient. I'm confident that this is the right direction to go in.
Yes. Well, I mean, you're just a wealth of knowledge. I mean, from options to Bitcoin mining to security to privacy, man, we could go on forever about everything. But right now, we really just got to give a quick shout out to our #1 sponsor of the show. We got Rhino Bitcoin. Because, historically, getting all your Bitcoin financial services in one place has been very, you could say, disjointed, often requiring multiple accounts, multiple platforms. Well, Rhino is here to solve that. They are the Bitcoin super app built by Bitcoiners for Bitcoiners. Of course, you can buy or sell Bitcoin with the lowest fees, giving you more sats per dollar with Rhino. You can make payments on the Lightning Network, instantly send cash globally anywhere to friends or family. And you can set up an automatic savings plan, DCA, set limit orders, and grow your wealth consistently with Bitcoin without even having to open it. And soon you'll be able to pay bills, borrow against your Bitcoin, save for retirement, and do it all within one app. And Rhino, they're huge on security. They've got biometric verification, 24/7 fraud protection, and the knowledge that your Bitcoin will never, ever be rehypothecated. And they also got a partnership with Casa. So if you are a multi-sig user with Casa, you can use the Bitcoin Rhino app as one of your keys. So go ahead today to rhinobitcoin.com or just click the link below in the YouTube description. Use the code Bitcoin News and Rhino will deposit $10 of free Bitcoin straight into your account. So big shout out to Rhino. Go ahead, give them a try today, and let us know what you think. We'd love to chat more about anybody who uses Rhino because we are happy customers ourselves. So yes, Andrew, tell me, in terms of simplicity and getting things onto the next phase, what do you got to do?
Cool. So, I mean, I can't believe it's already November. I spent too much time watching the shutdown for the last month and not enough time writing code. But the next phases, as I said, we've got a Bitcoin fork or a fork of Bitcoin with simplicity embedded. We've got a little bit more development work to do on that. We've got a whole ton of QA fuzzing kind of stuff. But we're hoping that in the next 3 to 6 months, we'll have like a public Bitcoin test network that people can play with. So that's really what I've got my head down working on. In parallel, of course, all the guys at Blockstream working on improving tooling and stuff. I will say right now, if people want to play with simplicity on Liquid, the easiest way, you can go to simplicity-lang.org. We've got a link there, or you can type IDE www.simplicity-lang.org. We've got an online playground. You can write code in a language called Simplicity HL. It looks kind of like Rust. It compiles down to Simplicity. You can generate addresses. You can move coins from the liquid testnet faucet. You can move it back. All this good stuff. So, yeah, there we go. And I think up at the very top, somewhere on the banner, there's a link to I think under Learn or Community. Community. No, Packages, Docs. Hey, there we go. ID right there, the bottom. Yep. You can play with it there. I'd say for people right now who want to play with Simplicity, this is a place to do it, right? We got this little playground there. Lots of examples. The help button has a detailed tutorial and stuff. It's not. It always there's a lot more than you might expect from the word help. So I always got to remind people this it's worth clicking that one. So there you go. Cool, Simplicity, and keep an eye on the website for updates.
Nice. Yeah, this is great. I mean, it's amazing you get this whole entire playground here and all the documentation to help people figure it out as they go, because this is a completely different layer or level of doing things, right? Or
yes, yeah, no, none of this was we really this has been a great effort by tons of people at Blockstream. Not so much me. I'm not so good at this, but the people who the people who know people can put this stuff together.
Amazing. Yeah. Well, I'd love to have you back, talk about quantum as well, because that's a hot topic du jour, of course. And it's amazing that you guys are putting your best foot forward and trying to figure it out before it actually becomes a problem for us Bitcoiners. So
yeah, for sure.
All right. Cheers, Andrew. And if people want to follow you personally, where should they go? What should they do?
The best way probably is my GitHub account, Poelstra. If you want to chat with me, I'm on IRC, I'm on Libera, I'm on OFTC. I'm Andy Toshi on IRC. That's I'm afraid that's my social media still. Back to the 90s here.
You're a real one. You're an absolute real one. All right. Well, I thank you so much for your time. And as I said, it was amazing to hear your perspective on these different subjects. Really, very, very cool to hear it all. All right, Andrew, thank you so much for joining us. And everybody, this has been Bitcoin News Weekly Live. We're here 11 a.m. Eastern every single Monday, right after the newsletter comes out. Come join us, have fun, drop your questions in the chat, and we will be back next week with another great guest.